Hi, everyone. Good evening, good afternoon, good morning, good day, whichever part of the world you find yourself. My Nigerian brothers will say, "Are they great una?" So, it's another video, um, which is going to be market review, okay, on synthetic indices. And today I'll be picking just one asset, and I'll be telling us the direction we must follow price so that you'll be able to win most of our trades. Because when we talk about trading, directional bias is very important. And the ideal time frame to get your directional bias from, if you want to take trade in one direction for a longer period until that trend is invalidated, then you are going to be using a very higher time frame. And there are three most important higher time frames. We have the monthly, we have the weekly, and then the daily time frames, which I know you are very much aware of. So without spending much time, let's go straight into our video. So today I'm doing volatility 10-1S, derivative synthetic indices, volatility 10-1S. And as usual, we are going to do a top-down analysis. Okay, sorry. We are going to start from a higher time frame and then drop down lower to a smaller time frame or a lower time frame for entries and all those things that you know about. Okay, great. So volatility 1S has been bullish after sweeping this liquidity here. Price took out this low but refused to close below. Okay. After we took out this low with this wick, price closed back up as a bullish pin bar, and then we have a follow-through candle, which is this bullish candle, right here. And afterwards, we had some kind of retracement or a sell down to the same level. And this time around, we can mark this level of support as the area that was retested before markets skyrocketed to the upside. So we can tell from this support level that price moved up, breaking above this resistance level. You can see previously price had used that level to sell off. So I can draw that area here for us to see how price was rejecting, even in an attempt to break through that level. And finally, it succeeded with this candle and then that candle. So actually, we had a breakout when this candle closed above that level. And that is the month of September 2025, where we have this bullish candle print. Okay. So after that bullishness, price was retraced back to retest the same level. And those of you that know about MNSR, Malaysian support and resistance, you can see this open close level, which is interwoven with this previous resistance level that price came to retest and then also took off by breaking structure here. Okay, so we have a wonderful break of structure right here, even on the monthly time frame, sorry. And then market went ahead even to break this level. So first of all, there was a sweep. As soon as this candle, which was a March 2026 candle, reached in there, there was a sign of rejection there, but this candle gave us a bullish continuation, right? Breaking that level. So external range liquidity has been taken, the overall target has been reached because market moved from swing point to swing point. So we moved from this swing low to that swing high. We broke above it, but then the next candle, look at that, was a strong rejection candle. It started selling, and then buyers took over and bought, closing as what? A hanging man. And what do you know about hanging man? Per our candlestick anatomy, we know that a hanging man is what? A bearish signal, all right? But we don't sell right away. So I was expecting markets to sell after this candle closed. All right, maybe you can call it a dragonfly doji. We have a long tail with a small body at the top. Okay, now let's go forward. Here, I could see price did a very nice sweep of liquidity above here and then rejected and sold off. So this became a very strong rejection candle, selling off and giving us a bearish engulfing right at this area. It tells us that the bearishness has resumed. Price would want to sell down, all right, sell down. Now, we are not going to stay on the monthly time frame forever. Let's switch to the weekly time frame to see what happened even on the weekly. So on the weekly, we can tell that after price took out that high, it went above and then swept liquidity here. And market failed to continue the bullish move, leaving a weak rejection here. So this was a very strong rejection even on the weekly time frame. So if you trade Malaysian support and resistance or MNSR strategy, you know that this is a weekly reject weekly. Okay. This level has been rejected. And as soon as that rejection happened, what are you expecting? You are expecting to trade candle trade to the downside because already the higher time frame objective has been achieved. Price has what gone far above this draw on liquidity here. So we're looking forward to sell. Okay. But then you will look forward for markets to what start breaking structure to the downside or show its bearish hand on the medium time frame. So from the monthly to our weekly, we will switch to our daily time frame. And we could see that even on our daily time frame, market did that sweep right there and close back within the range. Yes, good. So after market closed back within that range with this bearish candle, let me zoom out. With this bearish engulfing candle, it created what? A bearish order block right here, which this candle tapped into, rejected, and then we sold off, right? So this bullish trend, as we see here, was invalidated after price took our liquidity here and then gave us a shift here. Why is that a shift? That was our last area of support before price took out the liquidity. All right, when you switch to the line charts, you see that that was an area of support. There was another area of support. So the first switch happened here. We have another break happening right here. So we were bearish after price took out this low, even on the daily time frame. And that suggests that you are now going to be looking for selling opportunities on your 1 hour time frame and your 30-minute time frame. We as well use the 4 hour time frame. Okay. So I just switched to the 4 hour time frame and we can see how market has been selling to the downside so extensively. Even after mitigating this order block, price has been selling to the downside. Now, I'm not teaching entry models. Whichever entry model you know about, once you know you are bearish, then you are only going to take sell trades. You could as well take buy trades, but the one that can benefit you the most is the sell trade. Why? Because the overall direction has become what? Bearish, has become bearish. So I can't actually see any sell entries here, which I'm not even going to waste time on. So whichever way that you use, whichever trading strategy that you use, you're going to use that to find your entries. So this asset is bearish. This 10-1S, and it's going to sell for a very long time. Okay. I presume we are going to sell even until we take out this low here, this all-time low, this all-time low here. That can possibly happen. Yes, that can possibly happen because we've already taken this high. So the next area is to take out this all-time low, and that is going to take a very long time. So I think you're going to have a very strong sell even after price is able to break out of this support on the monthly time frame. Okay. And we have a monthly resistance here, which price came to retest and then gave us this strong wick rejection in the previous month. But since market is bearish, we are seeing this new candle even going bearish. This is a month of August. So if you know about CRT, you could have used what? This candle's high, previous month's high, like this. And then you mark the low like that. So that is going to be your DOL, your draw on liquidity. Okay. So you're going to frame your bias to the downside. Now, given the fact that this candle closed right here and a new candle opened, it started going up. And since you were bearish bias, we are going to wait till market liquidates this high, previous month's high. Okay. Once price liquidated, it started selling off from the monthly time frame. So you could go to the weekly time frame. We had a strong buy, liquidating that high, and then we are getting a strong sell back. Why? Because market is what? Bearish. It's bearish. So even though we have strong bullish move in the previous week, we are getting another strong bearish move back downwards after liquidating the previous month's high and tapping into this area of what resistance, which is a fresh zone. So there was what a break of structure here on the daily time frame, and this area served as liquidity. So price took out that liquidity and then it's selling off, and then it's selling off. It's selling off. Okay, it's selling off. Now we are getting a new break of structure here to the downside. So market is going to continue selling. If you like the video, make sure that you subscribe, you like, and then you share. This has been easy for us. I'm going to come your way with another video. So keep the bias. It's bearish. So keep on looking for sell entries. Possibly price may return into this and then sell off as a breaker, because this was supposed to be a bullish order block, but it has failed. So if market retraces back in there, it may sell. I'm not saying it will sell. You look for your sell confirmations and then you sell from there. You sell from there. You also have this huge imbalance, which is in line with it. Okay, so you have a breaker and then an imbalance. Thank you so much. I'm going to come your way again later.